Free and clear of the chatter from Wall Street, you're listening to Talking Stocks Over Beer, hosted by hedge fund veteran and newsletter writer Mike Alkin, who helps ordinary investors level the playing field against the pros by bringing you market insights and interviews with corporate executives and institutional investors. Mike sifts through all the noise of mainstream financial media and Wall Street to help you focus on what really matters in the markets. And now, here is your host, Mike Alkin.
Welcome to the podcast. It's Tuesday, October 2nd, 2018. I hope you had a good weekend. If you hear a little background noise, I'm on the road. I'm driving out to Long Island from New York City, and I had some meetings today, and my choice was either take the Long Island Railroad from my hometown into Manhattan or take the car. So, I mean, if any of you are familiar with either the traffic or the rail service in New York, you'll know there is no good decision. And whichever one I take is typically the wrong one. So, as usual, today was another one of those wrong decisions because it took far longer than I thought. And as usual, I find myself in the car getting myself a little worked up in sitting in traffic, trying to understand how to go 20 miles the way the crow flies, how that can take 2 hours. I still can't get my head around it, but hey, that's my cross to bear living here. Anyway, weekend was good. It was quiet, nothing really eventful, so I have nothing to report. Nothing too crazy or goofy happened. Just a nice, relaxing weekend with my wife and kids, and we just kind of chilled out. And there was, though, on Saturday, I looked at my emails, and I saw a note that Elon Musk had settled his fraud suit with the SEC, and I thought, oh, is that somebody just joking around? Because it was Thursday where the SEC sued him for fraud, and if I wasn't mistaken, Elon came out and said, "This is my integrity is everything. I would not settle. I didn't do any of this." And so he settled 2 days later, and it was claimed that in the settlement, Elon was the SEC. He agreed to step down from chairman of the board role at Tesla, after for 3 years, and he will pay a personal $20 million fine, and Tesla will pay a $20 million fine. And this all relates back to the tweet from August 7th, which is when he tweeted, thinking of taking Tesla private, $420 a share, funding secured. And it turns out there was no funding secured. There was no agreement. There was nothing. But he wanted to get a stock going, jam the shorts, and just play with them, because that's what he does. So anyway, he settled that, and everyone was very excited over the weekend. Obviously, all the bulls came out with, "My God, King Elon gets to stay. How wonderful this is!" And that was coincident. A couple of, I think it was Monday or Friday night, one of them. I forget the last couple of days, but Elon sent an email out to his employee base saying, we are something along the effect. And I'm driving, so I don't remember exactly, but it was, one more day. If we can get Sunday done, this will be an epic quarter, which is not anything remotely close to what the CEO of a $50 billion company does. And oh, by the way, so now it comes down to, is this a tech company? No, I'm sorry, it's not. It's not. Is this selling software the last day of the month? Because that's what happens in tech companies. The last day of the month is everything. But here, it's always to make the numbers. It comes right down to the last day of the month. And by golly, he's doing everything he can. He's saving the world, old Elon. But anyway, so he put out an email because that's Elon's new way of communicating with the market. Because as part of the settlement agreement, pretty much has to run anything that he's going to tweet by corporate lawyers. And then if they deem it material, you're going to see an 8K filed, which is what you need to do when you tell the world something, which he tends not to do. He just tweets it or there's a handful of websites that like to report his stuff, and always wonder where they get that information from. So, but the SEC felt as though they wanted to protect the small investor, as they said. I think history will show when we look into the future. Down the road, we'll be looking back on that going, oh dear, not quite sure that accomplished what you were hoping to happen. But hey, we'll see, because I think for me personally, as someone who's, like I said, I've said before, I love EVs, love electric vehicles. Really excited to save the earth. Me too. God, so unfortunately, Elon doesn't have the corner on that, or for the few 100,000 people who bought the cars, and those who worship Elon, who think that they belong to a special club, that if you disagree with the business plan, that you are against entrepreneurialism, you're against vision, you're against the environment, that you're a bad guy. And you're, sorry, that's not the case. It's when people are taking public shareholders' money, and there is $10 billion invested, and timelines are continuously pushed out. I think it's reasonable to just try and peel the onion back and understand why that's all happening. So, like I've said before, I think Elon is quite the visionary, quite the entrepreneur. I think his best skill set is he's a great salesman. He's able to convince investors to keep giving him money. And he's been very successful at that. Look at the stock price. And he's got a cult following. So, but at the end of the day, the math matters, right? You can make the argument that he's growing like weeds and no other vehicle company has grown like this. Yeah, absolutely. Last time I checked, revenue does not get deposited into the bank. Profits do. And when you have a mountain of debt coming due, and you don't have the cash flows to support that debt, to pay that debt, then the rubber meets the road, and we'll see where that goes. And so, I think I've often commented that I think Tesla is one of the most interesting, certainly the most interesting companies I've ever looked at, in the sense that looking at it from a numerate perspective, which sometimes doesn't fly in the argument of bull versus bear, because the bear case is predicated on it's all on the come, and the numeracy required to look at it and try and understand how it all fits together with working in the short term, because that's what they have to deal with when you have that mountain of debt and those cash burn that's coming. That tends to get lost in the argument. But so they came out and they talked about. So Elon's there, and the stock had a huge rally yesterday, back to about $307, $308. I'll remind everyone it was $379 when it peaked at $379, $380 with the funding secured tweet. So and along the way there have been, like I said, the email that was leaked by employees out to the masses, and that the delivery numbers were production numbers were going to be 50 to 55,000 on the Model 3. We were going to see the great numbers on deliveries, and guess what? Here we are today, and I've been in the city, so I haven't had time to really peel back the onion on it, but I did glance and spend a little bit of time reading the release. Lo and behold, those are the numbers that happened. But interestingly enough, in that production number, in that press release, I didn't see a reaffirmation of cash flow positive in the third, fourth quarter like we saw before. I did see some language around the Chinese tariffs causing some issues, and they're working through their logistics issues. But I didn't see a reaffirmation of that cash flow. And again, that's what matters when you got a mountain of debt coming due and you're bleeding cash. So we're going to see when they put their earnings report out. But in the interim, I thought it would be interesting to have a very vocal bear come on and talk about it. He gets hammered on Twitter. I think he enjoys it sometimes, though. Because all the people who come out and hammer him talk about the shorts getting crushed, the shorts getting burned. I love it, and I watch it because a lot of the people on Twitter who are the bulls who talk about it is clearly they're not investors, because the way the terminology, the not understanding risk management and how a short would think about it, even I see it, in the press. The shorts today lost X billions of dollars, and they'll go and right away they think everybody got carried out. There's risk management that takes place. But anyway, we're going to bring on Mark Spiegel from Stanphyl Capital, who's I've had as a guest before, and we're going to get his fresh, hot off the presses view of Tesla and what's going on. So, Mark, welcome to the podcast.
Thank you. It's great to be here again.
Well, yeah, it's great to have you. So you and I, we were just talking offline where the New York City sirens were going off in the background where you are at your office, and I'm sitting on the Grand Central Parkway, trying not to drop the F-bomb while I'm on the podcast with all the traffic that I've been sitting in. So listeners are getting a real flavor of what it's like to be in New York.
Every time I hear those sirens, the first thing I do is I look down to make sure the building isn't on fire, and then I feel my chest to make sure I'm not having a heart attack. And
right.
Then I know I'm okay, that the fire truck and the ambulance aren't coming for me, and so we're okay. I'm good for this podcast.
Good. I'm glad you're okay. That's great. Oh man. So I was just getting people up to speed for those who may not be familiar with what's going on with Tesla, and so I was telling them over the weekend that the SEC, after probably 48 hours, decided to settle with Elon Musk, and put that behind him, and a whole $20 million fine for Elon, and he gets to keep the CEO role. And from my viewpoint, Mark, it's funny, right? Because if you brought a new CEO in role, and I've thought about this, if Elon left and you brought a new CEO in, probably if the guy is halfway numerate, what he's going to do, my guess would be, spend a little bit of time, look at the numbers, and reorg the company, and either quit or just say, or go to the board and say, folks, we got to bankrupt this thing, right? So I mean, that's kind of how I viewed it. On the other hand, I thought as long as this guy's allowed to run the company, that's great, because he's going to do what he does, which is overpromise, underdeliver, and the cash is just going to keep imploding. So. That was my point. Obviously, you knew Monday would be a big day. The market would take that as very exciting. You'd have the sell side guys come out, jump up and down, those who still like them, which is, and the guys on Twitter, some of the RIAs that are out there, and I think you know who I'm talking about out of California. It's just, I mean, you can't even make this stuff up. But so anyway, so then here, today, I know I've been running around the city. I've been at meetings, and I looked at the numbers a little bit on the production and delivery numbers. But it's kind of what was being leaked over the last few days, as that's what Tesla does, which was, the 53,000 Model 3s and the 80 some odd thousand vehicles they delivered. I mean, what's your view? You've had a chance to pore over the numbers. So what's your take on what they put out this morning?
I mean, I think the biggest take I have, look, if those numbers are real good for them, but this is as good as it gets, because the backlog for the rear-wheel drive long-range model is gone. They have a lot of them sitting around in inventory. The New York Times actually spotted them this morning in a very good article. The all-wheel drive, they have some inventory, but then they also have mismatch on deliveries through their logistics screw-up. But from what I've read, the guys who track this stuff, that backlog is going to be gone before this first month of the quarter, October, is out. And then they're screwed, Now, look, I mean, they'll start selling these in Europe at some point, although they didn't mention that today, which is interesting. And, we've been theorizing that maybe they're just not homologated yet for Europe. Maybe there's some safety issues, either with the touch screen or the rear door locks or something, but we don't know. Or rather, inability to open the rear door if the car loses battery power. We don't know. But, at any rate, this is really as good as it gets in terms of profitability and probably deliveries, because I don't think enough new orders are coming in to make up for, whatever the smaller amount of overseas sales that they'll be doing when they do start going overseas, And then the next thing they'll do is they'll come out with the shorter range model, which will have a smaller battery, but there isn't really much else they can strip out of the car. And I don't think they can save more than, $4,000 by going to a smaller battery. I mean, especially if you believe the low battery costs that they claim to have, right? That's a double-edged sword.
Yep.
And in that case, I mean, I see them, the less expensive car not being $35,000. I see the best case for it is $40,000 with in best case in terms of low price, would be like $40,000 with the mandatory premium package, which is what they do now at $50,000 for the longer range car.
Yep.
If that happens, if it's a $10,000 price cut, but only a $3,000 or $4,000 savings on car equipment, most of which would be the battery, I mean, they're screwed. I mean, basically their gross margin, is cut by 2/3, which means they'd have to sell 3 times as many $40,000 short range cars as they're selling on long range cars. But here's the thing: the long range car in the U.S. gets a $7,500 tax credit, right? That goes away next year. It gets halved and then halved again. So right now you can buy a long range Model 3, rear wheel drive, for a net cost of $42,500, right?
Yep.
How are they going to sell a short range car for only $2,500 less, which is what it would be at $40,000 once the tax credit is gone? I mean, if they're basically at a backlog now, who's going to step up and buy a drastically inferior car for $2,500 less? You're financing the car. Nobody's going to notice that money,
Well, that's it, Mark. You mentioned, so let's talk about the backlog, right? So, we heard originally 500,000, then for a long time it's been 420,000 backlog, and yet
420. Anybody believe that number?
No.
Does anybody believe that number? 420,000. That was the number they put. I mean, I could guess how that conversation went. What's his name? The CFO Deepak. It's like, hey, Elon, what should we put in the press release for the Q2? What do you call it? Reservation list for the Model 3. and Musk takes he takes a big hit of a blunt, says 420, and that's how they did it. Anyway, but listen.
Well,
I don't know
after all, we
speculating.
Well, but we do know, according to what he said, that he chose 420 because he thought it would be cool because it has some sort of marijuana connotation to it, right?
Well, that was on the buyout offer. So why not 420 again on the deposit number?
Right.
Yeah.
Well, and there was was there any mention of that today in the press release of the?
No, they actually. Yeah. They omitted that. They omitted any mention of profitability, which they had promised before. They omitted any mention of being able to sell cars in Europe pretty soon. I mean, the reason the stock, is now down roughly $8, as I say this at 20 to 3 on that day, is that there was no real positive guidance, and a lot of people say, well, that's because of the new scrutiny by the SEC, which is really possible. So
really possible. Well, let's talk about that, Mark. So you talk about this long reservation list, but yet you saw, as I saw, and a lot of anecdotal stuff, and that over the course of the quarter, there were people ordering cars, getting them relatively quickly. So what happened to all those reservation holders? How would you feel if you were on that reservation list? Because then that's telling us, right? It's telling us they're all $35,000 holders if that's the case. And if you can't get there and the tax credit goes away, then what happens? So, what's your view on that?
Right. So my view is that reservation list, the vast majority of it was comprised of people who were promised a $35,000 car with a $7,500 tax credit. Right? Mm-hmm. So these people put in a reservation thinking, they would get a car which would cost them $27,500. And according to Musk, although he didn't explicitly say it would include the self-driving, but according to Musk, for let's say another $5,000 or whatever it would be, you could press a button when you're in New York and summon your car from Los Angeles. I mean, it was such total nonsense, right? So, so that's what reservations were. They were for a fictional car that will never exist. I mean, the tax credit's going to be gone, and as I said, I doubt he'd put it out at 35 anyway. Best case would be 40, with the mandatory premium package. It could be 40 as a base, and no premium package, which would be even worse versus, spending $42,500 today to getting a long range premium with the tax credit, which is going away.
What's your view on the amount of cars in transit as you saw in the press release?
Since production, there are, I believe the number is around 3,000 missing Model 3s that between what they claim they produced and what they've delivered. So I don't know if some of those were scrapped, which Musk hinted at because, they were producing such garbage when they were trying to cram everything, through the assembly line and the tent and the paint shop, or if they've been put into, I haven't heard about any Model 3 loaners yet. I guess they have demo cars around, or if they're sending some as inventory unsold, to China maybe or something, or they're in Tesla's inventory. So I know that the in-transit number is lower now than it was last time. As you said, it's about 8,000 now, and I think it was about 11,000, at the end of Q2.
Yeah. Yep.
But I mean, it's just intuitive that the only place they can really maintain this level of sales is going to be the first quarter or two of overseas, sales, and they don't seem really ready for that. At some point they'll sell them in Europe, but by that point, I mean, there are some really good electric cars in Q4 that are hitting Europe before they hit here. Kia and Hyundai both have a small electric crossover, which is similar to what the fictional Model Y would be from Tesla.
Mm-hmm.
And they're going to sell for, a U.S. price probably just under $40,000. And they have a range on the U.S. EPA of like 260 miles. They're rated at like 300 miles on the European cycle. I mean, that's real competition, especially since people want crossovers for the most part and not small sedans. And then when you get into the sort of the fancier Model 3, like the all-wheel drive or the performance models where you can get a price, up in the 60,000 range or more. I mean, the Jaguar I-Pace, which is a spectacular car. I mean, I've driven it. It's way nicer than a Model 3 inside, and it's got way more capability. It's you can actually take that thing off-road. That car starts at $69,000, and it's going to have the $7,500 tax credit. So, that car is essentially a net of $62,500, and as the tax credit diminishes on Model 3s, they're going to be the same price, and there's no comparison. Unless all you care about is 0 to 60 time, where they're the performance Model 3, definitely has an edge, but most people don't care about that. They want a nicer car, and the Jag runs to 60 in 4.5 seconds, I think, and it's a crossover, which is what people want. So Tesla's going to have competition on both, for the Model 3, on both the high end and the low end. And of course, on the high end, the Jaguar is much nicer than a Model S for $7,000 less. And Audi has this e-tron electric SUV coming out, which looks spectacular. It's going to be on sale in November in Europe. It comes to the U.S. Next April. So they're going to get slammed on the high end and the low end, which is why I think this quarter is the best they'll ever have.
Well, Mark, and you're saying the quarter being the best you'll ever have. We've only seen the production and delivery numbers, but we've not yet to see, obviously, they haven't put out the earnings report, so we don't know what the earnings or the cash flow look like. And how are you thinking about this upcoming quarter? Because I was surprised when I saw in the press release no mention of reiteration of cash flow positive, but I did see the whole paragraph about China and the tariffs and what my take on Musk is a great messenger, right? So he tells you things and he tweets them out all the time. If you just read through the lines a little bit, you kind of can take away the message. And for me, without seeing that cash flow statement or the cash flow reinforcing the cash flow positive, and then seeing there's a lot of conversation about China. He's been tweeting about logistics nightmare and logistics hell. I mean, what's your view on how are you viewing what the numbers that matter really will look like? Not the delivery and production numbers, because that's where he's focusing everyone. Well, but the stuff that's going to pay those bonds coming due and get them to the next, carry on.
Right. So let's start with GAAP. So GAAP, I could see a small GAAP profit this quarter thanks to the mix, the heavy mix of the all-wheel drive models and the performance models, which first became available both this quarter. And, and the sale of ZEV credits, depending on what they can get. I mean, I understand the market for those. Those are the zero emission credits that they can get with cars sold in the right states. Putting all that together, I could see them making GAAP something between 0 and 100 million in profit, as sort of a best case scenario and the best it ever is going forward. I don't know. Let's say maybe they could make 75 million, but it's hard because they had so many crazy costs on defective cars and cars they had to repaint and all that kind of stuff. And, last minute, probably more expensive trucking costs that they might also have a loss, but I think it's not going to be a severe I don't think it's going to be a big gap profit or loss either way. I think it's, I don't know, somewhere between minus 50 and plus 75 or something. As cash flow is tough, man, because there's so many games that they can play, further stretching out their suppliers. And I mean, who knows? Maybe they're double borrowing on cars. I mean, there's a lot of cars apparently, if you believe the forums, and there's enough instances of it where they took full money for a car and then kept canceling the delivery date and said they deliver it, in October or November. I mean, have they also borrowed against the ABL on those cars? Are they double dipping? I don't know. That's not an accusation, but it's a question. It's just something that should be looked at. So I don't know where they come in on cash flow, but I know this. I mean, let's go back to GAAP earnings. If this is the best quarter they ever have, and let's say they make $100 million, and let's just say, for the sake of argument, which can't happen, that they could make $100 million a quarter in perpetuity, so they would make $400 million a year. I mean, automakers have a PE of 8. Okay, if you gave Tesla a PE of 25 on $400 million, $10 billion, that's the debt. It leaves zero value for the equity, right? Yep. So, yep. It's like, so the way I see two possibilities here. One is they go away fast, like they don't have the cash flow, they can't pay off the converts, they somehow can't negotiate, this pay them in stock or whatever happens, or suppliers start shipping them COD and that's it. Okay, that's a fast value. The flip side of it is, it just becomes a busted growth story, and as the months go on, it gets revalued into, this is a car maker, they lose money, or they barely break even, or they make a tiny bit more, whatever the hell it is, and they get an appropriate multiple for a car maker, which leaves the equity value at near zero. And meanwhile, of course, Musk is the wild card, and I don't mean that in a good way. I mean, I'll be shocked if he can adhere to this SEC agreement that basically shuts him up. I mean, he's already playing games with it, as you know from his tweets the last couple of days. The OPP tweet. What's that band? Naughty by Nature, and he tweeted a smile when somebody commented on the stock price overnight last night. I mean, he can't control himself, and I think on one level he's a self-destructive guy, and he thinks he's above it all, and he thinks he put one over on the SEC, and my guess is the SEC understands him very well, and they're just laying in wait, and they'll spring the trap on him for something that's bigger than that, so they don't get blamed for shutting down a company just over 3 or 4 stupid tweets. But I think there's more out there. I think there's probably a lot of whistleblowers out there, and so this either gets shut down regulatory wise, or it just gets shut down as a business, or it just, the equity just gets wiped out or almost wiped out just because people realize what they're dealing with here, which is a busted growth story that doesn't make money.
Yeah, it's interesting. You talk about his tweets. I was thinking back to, I think it was early September, where I think he put out a note that said we're about to have the most amazing quarter in our history, building more than twice as many cars as we did last year.
Right. He didn't come close to twice as many cars. Right. Yeah.
That's 100. That would have been 106, 107,000 cars, and he puts out 82,000, 83,000 cars this quarter, and that's on the production side, right? And forget the
delivery.
Delivery side. But so how do you see this unfolding, Mark? Because my goodness, I mean, stock goes down to 260. It's an interesting number. Whenever that stock hovers around 250, 260, boy, news comes out, something happens that gets it higher. Where's your view on margin calls that come into play?
It's hard. I actually wrote an article about this in the spring for Zero Hedge, and as best as I can tell, and it's sort of guesswork. If the stock gets into the sort of the low 230s, he'd have to post more stock as collateral at the very least. I mean, at that point, and who knows since then? I mean, hell, he probably had to borrow more to pay these fines, right? And buy the stock he did in the open market, which, by the way, was a manipulation in itself because he did it in the illiquid pre-market twice in the spring just to jam up the price. I mean, it's hilarious what this guy is like. This guy is like I mean, there's somebody on Twitter who's very good. I forget his name, but I think his handle is like Gin SEO or something. He basically said, He basically has said before. He said, think of what the any pink sheet penny stock boiler room, fraud kind of stock would do. And that's what Elon Musk is going to do on this $50 billion company. So, jamming up the stock price in the open market.
But those penny stock promoters go to jail, right?
Well, that's the interesting thing. I mean, right? So far, he's too big to fail, right? I think what the SEC is hoping is, those guys aren't dumb. And I think what they're hoping is that, if this thing is, that Musk's problem gets taken care of just from the business. They're not the ones who put him out of business. Musk is the guy who puts himself out of business, right? I think that's what they're hoping. So, but you asked me a question. I went on this long-winded.
Oh yeah, no, I was going to say. So as we see the evolution of this, he's got some big debt payments coming due. Whether or not he makes 75 or he loses 50 million this quarter, by not seeing the reinforcement in this quarter of cash flow positive, that to me that means something. But even without that, I was very suspicious third quarter, fourth quarter. He's got a mountain of debt coming due. He hasn't raised capital, and we've got this competition coming. So, how do you view this playing out over the next 6-9 months?
It can happen two ways. I'm gonna paraphrase, that famous Hemingway line. How did they go broke? Slowly and then quickly. These guys could go broke quickly or slowly. I'll turn it around. Listen, if they can get a registration statement through the SEC, which is a big question because the obvious question is why haven't they done that already? But okay, maybe the SEC now will allow them to disclose whatever else is going on and register stock. So, maybe somebody will give them a couple of $1 billion to keep the lights on for 6 months. And my guess is it would be, some very ugly deal from a consortium of hedge funds or somebody who, heavily discounted stock or, a death spiral convert or, death spiral preferred, something. Anyway, so maybe they can pay that stuff off and keep the lights on for another 6 months. So then next year it's a busted growth story and it's that much harder to raise the capital they need incrementally from there. Or maybe nobody gives them the money now and they put it into bankruptcy or like heavy restructuring, like, big write down of the debt, lots of equity issues. Look, the one thing I can't rule out is, somebody puts money into this company now or, soon at some ridiculously low price relative to where it is. They say, yeah, I'll do this at, I don't know, whatever, $15 billion valuation. So what would that be? 10 of debt and 5 on the equity would be like what, like $30 a share? Maybe somebody puts in equity at $25 to $30 a share, and the stock still trades at $150 because a bunch of idiots out there think the company's now saved, And because presumably a deal like that would not be registered stock, so it wouldn't go into the float and it wouldn't be available. So anything can happen with this crazy company, but the ace in the hole is really Musk, who will wind up blowing himself up anyway.
So, Mark, I want to go back. Today was production delivery numbers coming out, and I know we touched on demand, but I want to go through this because one of the things that, since I've been looking at the company, that strikes me is the demand side of the equation, and why is everything so focused on production with this assumption that the demand is there? So, as
right, of course, you know the answer to that because that's the way Musk and the company have steered the gullible media.
Right, so those are the numbers.
Sell side.
So talk about, as because people will say, listen, okay, Mark, so lay out the case. What's the demand case that you see? Because to look at the bulls will think it's unfettered demand, and they're going to take over the EV market. Lay out the demand unfolding as you see it.
Well, first of all, it's a limited market for cars at 50,000 or higher anyway. Shano's put out the number, but it's a relatively small number of cars and not crossovers, on top of that. These are sedans, right? Small sedans. So, and again, the rear-wheel drive backlog is gone. New orders for that car now are probably like trickling in, and the all-wheel drive backlog will be gone soon. So I don't know how many of these they can sell. So the U.S. right now is something like, I think, 50 or 55% of the market for the S and X. If that were to be maintained and steady state U.S. demand is might be only like 2,000 cars a week or something. If the rest of the world would buy another 2,000, maybe they could sell 200,000 a year of these. which would be 50,000 a quarter versus the 55 they just did, but the pricing would be considerably less. They won't be able to get this $60,000 ASP they supposedly just got. So that's why I think they can't make money. And the other important thing to remember is the competition on the high end. I mean, the Model S and X probably have 3 times the incremental contribution margin of the Model 3. So, for every single S or X sale they lose, they'd probably have to sell 3 of these Model 3s to make up for that. And that's 3 Model 3s, not the cheap model. That's the one that starts at, 50 and would have an ASP at 55 to 60, let's say, right? So, and those S and X's are going to suffer, as the Germans and the Jaguar come in. So I just think they're screwed. I think S and X, by the way, demand has been roughly flat anyway since like 2016, before the luxury competitors came in. So, and by the way, then they start teasing about the Model Y. Really, where are you going to build that? They would need a couple of $1 billion at least of CapEx to build a factory for the Model Y, or to build a factory in China in order to beat the tariff.
In the press release today, they talked about they're going to be ramping up the factory in China. With what money?
Well, actually, in the press release, I believe they said accelerating. So I did raise the question.
Accelerating, yes.
How is accelerating compared to ramping? They just switched the word. If you look through a Tesla press release and do a Control F search for RAMP, it probably comes up like 50 times, right? So I guess they switched. They switched it up on us to accelerating. So I don't know. I mean, they got to raise the money. U.S.-China relations are not great right now. If they raised it, it would undoubtedly have to stay there and be just for that factory. It's actually unclear if they build in the China free trade zone, if that would be tariff-free, or if they would still have to pay, the import tariff, which isn't bad. It wouldn't be like coming from the U.S., but it could still be like, I think they just cut the tariff to 15%. It used to be 25%. So it still might not be tariff-free. Up to now, when you build in a free trade zone, you still have to pay a tariff if you import it into the mainland outside of that free trade zone. So that's an unclear situation. But at any rate, that's years away. And the company, I don't think the company has that much time.
So you are a lightning rod for Tesla, and you are out there and you use your name, and so nobody could dox you, right? I mean, that's who you are. So
I'm pre-doxed. I come pre-doxed.
You're pre-doxed. So, but
I'm inoculated against being doxed.
So you see every bull case coming at you, and some is well thought out, and others that people full of emotion spewing venom at you. What is for those? I mean, what's the best bull case you've seen that you sit there and say, because you're open-minded, right? You're a hedge fund. You're long and short, and so you have the ability on anything, any name. I mean, on this one, it's different. But what's the one where you've said, maybe there's a possibility, because you're looking at everything. You don't own you don't have a monopoly on being right for everything. So what is it when you've seen one? What's the bull case, or is there one?
Somebody just, it's funny you say that. Somebody who's an analyst just emailed me the exact same question, ironically, literally, as we're on this conversation. And he said to me, because I told him, I said, I haven't yet found a bull worth listening to. And this guy emailed me back. He said, if you can't intelligently argue for both sides of an issue, you don't understand the issue well enough to argue for either. Okay? And here's my answer to that. There are many, many companies that I won't touch because I understand both sides, okay? I will not short Netflix. I understand how expensive Netflix is and how much cash it's burning, right, on current parameters. But I also understand that there's probably a lot of pricing power there. And if everybody paid, $16 a month instead of 10 or 11, right, and they had 250 million subs instead of whatever they have, 100-something million, all of a sudden, you've got a very different-looking company, right? It doesn't get cheap then, but at least it sort of makes sense, okay? I can't find an intelligent bull case for Tesla from people who have actually done the work. I just can't find one, I mean, my answer to that guy who emailed me this thing kind of obnoxiously, but that's okay, I'm an obnoxious guy myself, is like, listen, there can be a piece of shit lying in the street, right? And, and I could say it's worth 0, am I supposed to understand the bull case for why it's worth $100 bill? You know, maybe if it was a piece of Elon Musk's shit, it would be worth $100 bill. but other than that, you know, so I just haven't heard. I mean, you hear these people like Ross Gerber and ARK invest with her $4,000 price. She's like, oh yeah, Tesla's years ahead of everybody in autonomy, and you know everybody's going to have rent out their self-driving car. But I mean, anybody who's studied the situation knows Tesla is years behind everybody in autonomy. Their software sucks. They have no LiDAR, which you need. All they're ahead of is recklessly deploying autopilot on the highway so people can put up YouTube videos of their car getting taken over, like what was that Stephen King car that tried killing people? You know,
Christine.
Christine.
Christine?
Yeah. I mean,
yeah.
Christine. Yeah. So I mean, so that's how they're ahead. I mean, Musk puts out like beta versions of software steering 5,000-pound machines around, and he doesn't even have the hardware to back up the software properly. So I mean, believe me, I can see both sides for Amazon. Okay, I can see both sides of Salesforce. You give me any so-called bubble price stock, just about, and I can understand both sides of it. There isn't an intelligent other side for Tesla. I mean, I could make up a bunch of nonsensical pie-in-the-sky projections and stick the spreadsheet in front of somebody and say, here's the case. But, you know, it's got to be grounded in reality.
Yep. That's great. Anything else you're looking at? What else outside of Tesla, what else is interesting to you right now?
All my other positions, except for one sort of nano cap long, it's all macro, and it's all macro, and it's mostly short. I mean, I'm short the Russell 2000 very heavily. I mean, it looked to me, I mean, I've called it on and off and been stopped out, but it did look to me last week as if that was it. So far, last week and this week, that's working out. It's getting pounded today. I mean, the PE on the Russell 2000 as of last Friday, the gap trailing PE was 59. I mean, that's an index, right? I think the debt to EBITDA ratio of the Russell 2000, I saw a chart last month, is just off the charts. So I've been short that. I've been long ag commodities. There's a great ETF for it. It's DBA. And, you know, I put that on a little bit higher than it is now, and it got pounded down. I added a lot to that because, you know, those things are just so washed out. And now we've got the NAFTA agreement approved. And, you know, so it's not a home run. But those ag commodities are back to the level they were in 2002, right? Well, every other thing is just off the charts. And meanwhile, the world's population is bigger, and people got to eat. Yeah, there's production. Anyway, so there's that. And I've been short for a while. It's an ETF, which is European sovereign debt. Ticker is BNDX. It yields roughly 1% with like an average term of over 9 years. And you know, it's got Germany in here, but then it's got all the garbage bonds like Italy and Japan and all that stuff. So you know, I'm short that, and it's actually got positive carry with the rebate, at least from the interest earned rebate.
Yes,
my prime broker. So. Got that, and you know, that's it. I really only have like roughly, I think maybe 6 positions now, and then I'm long one little company. I don't want to talk about it here. It's a little company, so I don't want to be accused of spiking the stock.
Exactly.
But I thought. I mean, that's a stretch right there, but you never know. So you know.
Well, listen, I appreciate it. I just wanted to I wanted to get your thoughts on both the SEC stuff and with the numbers that were coming out today. That'd be good for listeners to hear what your thoughts are. I really appreciate you taking the time to come on.
Thank you. It's always fun, and I appreciate the invite. So have fun on the Grand Central Parkway there.
Yeah, thanks. I will. We'll
Take
speak
care.
later.
Okay, bye-bye.
Okay, thanks. Well, I hope you enjoyed listening to Mark Spiegel. He's always a good guy to spend time chatting with. Mark just tells it like it is, tells it as he sees it, right? So he doesn't sugarcoat anything, and you're always going to get his unblemished view on how he's viewing it. And, obviously he's a lightning rod. There's a lot of people on the bull side who just like to go after Mark because of his negative views of Tesla. But I think Mark has a really insightful view and analysis as you get to read his stuff and watch his stuff. And it's taken longer for anyone would have thought from the short side for Tesla. And we'll just have to see how it plays out. But I wanted to bring that Mark's thoughts with all that was going on with the SEC and the numbers they put out today. So anyway, I am sitting in traffic. I am on the Grand Central Parkway in New York, and I'm trying to figure out how to make those 19 miles not turn into 2.5 hours. And I don't think I'm going to be able to do it. So I'm going to cut this short, but I hope you have a good week, and I will be back next week, and I look forward to chatting with you then. Thanks. Have a good week.
The information presented on Talking Stocks Over a Beer is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.